And now this is a good timing for the next presentation and for the case study from PayU company. And I would like to introduce to everyone Asif Khan, who is a global FP&A lead at PayU. First of all, and my first question to you, Asif, we are seeing this new breed of finance professionals or FP&A professionals. Those people that are both finance and they also have a unique technical skills as well. So, and I think this is exactly what happening in your organization. This is exactly your profile, Asif. So would you like to introduce yourself and to tell us a little bit about your skills and experience?
Yeah, sure. Thank you, Larissa. You're very right. So I don't have a particularly traditional background for an FP&A professional. I do not have any accounting degree. Basically, I completed my bachelor's in technology. While I was doing my bachelor's, I got really interested in the field of finance, and that's why I shifted gears, started working in finance, and completed my master's degree later in finance. So at PayU, this is my true first operational finance role. In my prior positions, I was more working on investment banking, investment management, quantitative hedge fund, and also a technology venture capital to invest in technology companies. So from my side, I have always been interested in understanding the ways technology disrupts industries. And this is probably evident from my reading pattern, which you can see on the slide. I'm really excited by the combination of tech and finance, and I'm grateful to be able to combine both in the current project we are going to discuss today.
Thank you, Asif. And this is exactly what we observe around the globe, that those predictive analytics or artificial intelligence projects, they are led by those people with both data science background and finance background. So finally, data scientists and finance people started to work together. So before we look at your case study, which is very interesting, very unique, I would say, because you managed to introduce this in only 3 months. In the first 3 months, you already had some incredible results.
Yeah.
Please, would you like to give a quick background of your organization and how you did your forecasting before you introduced machine learning to forecasting?
Yes, sure. So I'm working with PayU, which is a financial technology business, which is operating in 18 high growth countries across EMEA, LATAM, and India. We generate close to 300 million revenue last year. In a way, we are small or medium-sized business, but fast-growing. We have also started with consumer credit products and invested in other financial technology companies. So PayU itself is a part of Naspers Group, which is one of the largest tech investors globally. So you might have heard Naspers investments in Tencent, in Flipkart, in Udemy, Delivery Hero, others. So that's just quick background about my company. And what I will talk is next, how we were doing forecasting before we started with machine learning. The regions and countries which you see, so these 18 countries, 3 regions, they were doing bottom-up forecasting exercises. What it means, they were discussing with the commercial teams, doing pipeline analysis, and then performing some seasonality sense checks. Now, this process had several pitfalls and low level of accuracy, which forced us to look at other tools for forecasting.
Yes, interesting. But what was the reason actually that you started to implement this project? We already can see these pain points. Would you like us? Would you like to share those pain points with us?
Yes. So I think it's what a pain point which we saw from the bottom-up process was that one, we are in a fast, rapidly growing industry itself. Some of the countries are going 40-50% in terms of payment growth. So this fast growth itself presents difficulties in forecasting. And sometimes what we saw that bottom-up forecasting was even off by 5% versus actual. So there was a lot of low confidence in the bottom-up forecasting being done. Second pain point which we saw is that the industry itself, or the fintech industry in general, is relatively new, and the drivers are not always clear. So not having clarity on drivers was a pain point for us. Third is also man hours spent on forecasting. So the bottom of forecasting process from start to finish across all 18 countries might take around a week. And finally, what we saw is also biases. So as humans, we are still very much prone to biases, and those biases feed into the forecasting process. For example, a commercial team member might be too aggressive or pessimistic on the growth expectation. These pain points meant suboptimal forecast, which resulted in difficulty in decision making. So we started looking for other tools which could help us improve the accuracy. And that's how we decided to test the machine learning based models also.
Actually, very typical pain points for any of the company. Now, I would like to ask the favorite question, you know, and Asif, when we met 3 years ago in Amsterdam at FP&A board, we had this quick discussion, and I was really amazed by your project. So the project that you managed to implement in only 3 months, you know, so the first prototype was ready in 3 months, but also it's not only revenue forecasting. Actually, this is the forecasting of several lines of profit and loss account, but also you managed to implement this dream of many FP&A professionals. So how we can use artificial intelligence and machine learning for driver-based planning, how we can identify the drivers. So please, would you like to share with us your idea how you do this?
Yes, of course. I think Matthias, in his really fascinating presentation already touched on the driver-based model. And I think we were also quite similar in that sense. Having driver-based model is especially helpful in our case, because in a relatively new industry, we are still experimental with the drivers of our business. So when we were doing bottom-up forecasting, there was a lot of focus on internal drivers, but very less on external ones. So when we started with the machine learning forecasting, we decided to include internal as well as external drivers. Few of them are industry growth rates, GDP of countries, inflation, unique seasonality, and others. So using machine learning models allowed us to experiment with many external drivers fairly quickly. We evaluated the predictive power of these drivers. The ones which had substantial impact on the forecast, we included those in the final model. I will just give you an example to make it more clear. We provide payment services to e-commerce businesses. And intuitively, it may seem that consumers would like to shop more on weekends when they have more time. And so higher number of weekend days in a particular month should impact revenue positively. However, when we tried to test this hypothesis with machine learning algorithms, the result was totally opposite in few markets. So we realized that in some markets, consumers shopped more on weekdays. So more number of weekdays in a month imply higher revenue. So to summarize, using machine learning algorithms enabled us to, one, test the number of drivers relatively quickly, and two, it also helped in the process of driver discovery or finding new drivers which we were unaware of.
Interesting, but now more technical question. FP&A architecture. This is such a great subject at the moment. So what was the architecture of this project? Please, can you share this with us, Asif?
Yes. So I think it's fair to say that we took a more agile approach to machine learning model implementation in our company. So as a first step, we did not go all in on machine learning with significant resources. Our idea was to come up with a prototype and test if there is some merit in actually using machine learning models or not. So the criteria of success of prototype was very simple. Can the prototype models forecast better than the bottoms-up process? Secondly, to come to prototype, we formed a small team. So I have engineering background, and one person who reports to me, she also has engineering background. Furthermore, we sought help from tech team members on part-time basis. I also agreed to assist in any external training if and as needed. And that's how we got to start as a team on the project. Next step, which was crucial, was data preparation. So we had data sitting in multiple locations and silos. So connecting all the data sources, cleaning it, removing the outliers, and then making a usable data repository was a crucial step. And finally, we managed to start implementing machine learning algorithms on the data set. We divided the data set into two sets, basically training data and test data, something I think you can see on the slides right now. And the idea is that, let's say if you have 1,000 days of data, you can use 900 days to train the models, machine learning models, and the remaining 100 days to actually test the models. So the models which fitted best on training data and test data, we use them, and our confidence in the predictability of these models was fairly high. All these steps took 3 months for us to have a final prototype version of machine learning models. And this time frame, I would say that it was 3 months for us, but it will really depend on the complexity of each individual company, and hence for large companies might take many more months. So these models helped us to forecast revenue and gross margin. The costs were more straightforward. Yeah, the costs were more straightforward because being a medium-sized company, those are controlled very tightly. So forecasting the revenue, forecasting the gross margin, knowing the cost, we were able to get down to EBITDA level forecast. This is still a prototype, and work is not yet finished. Machine learning models are data hungry. So we have continued to enrich our models and still testing them to get better accuracy.
Very interesting to see the results. So can you share with us what was before and what you have after as the result of this quick project that you introduced?
Yes. I think after completing our prototype in 3 months, right, we have continued to make the models more robust. We have seen several successes over time. First is that machine learning based forecasting has showed potential to reduce reliance on bottom-up forecasting, and now we are working towards shifting to more centralized approach where regions are also providing input, but the forecast is more on a centralized basis. This has helped us to improve the speed of forecasting. So bottom-up forecasting, which took us almost a week, now we are able to do forecast in just a day with machine learning. Another major advancement is that we are able to take into account more number of drivers, just both internal as well as external. This improves the understanding of business and also sometimes helps give early warning signs. What is also, we have been seeing significant improvements in accuracy of forecast. So the variance before with the earlier process with bottom-up forecast, the variance might have been 5%. Now we are down to less than 2% with machine learning forecast. And please remember that our high growth rates in some of the markets, 2% variance might seem high, but depending on since we are growing much faster, we are kind of quite comfortable with it. We are still continuing to work to try to further reduce the variance. And another area which we have not yet explored, but soon will, is incorporating the machine learning forecast into the budget process. So currently in my company, the budget process takes about 3 months to complete. My thinking is that for products and countries where we have significant data, we can potentially rely on machine learning models for budgeting. So the budget conversation totally shifts to strategy, to new products and new developments, which company wants to initiate. This can potentially shorten the budget timeline.
Asif, yeah. The results are absolutely incredible. And the question is, what are the lessons that you would like to share with people?
Yeah, I think the first recommendation would be to not jump at extensive investments in machine learning, but to take more measured steps. So first step is to try achieve a good working prototype and then try to scale. This minimizes initial investment and also provides important initial learnings. Another thing is to look at the talent gap and partner as needed. The partnering can be with internal tech teams or with also external providers. Also, the commitment is important. The way we approached that was machine learning project implementation is one of my annual objective for appraisal, right? And that's how it goes with the people who report to me. So it did not matter whether the project failed or succeed, as long as it implemented. This allowed me and my team a room for experimentation. Again, going forward is that since machine learning algos are new subject for FP&A teams, so self-learning would be needed. There are several good courses online which we can make use of. Also, just sharing your own learnings, right? Forecasting is just a start. When you start to share your learnings within the organization, you might seek out more avenues to harness the power of machine learning within your own company. And I think the final one is recommendation I would say is really machine learning is additional tool in arsenal of FP&A teams. So it is not only for large tech companies, but I believe we can all in our finance team can benefit from this technology. So the recommendation is really to start now.
Asif, thank you so much for sharing your experience with us.